Welcome to the Blake Overton Mortgage Team audio series, where we break down the most common questions that homebuyers have when it comes to financing their dream home. In these short, easy to understand guides, I'll walk you through the essential information you need when borrowing money to purchase a home. Whether you're a first-time homebuyer, selling and moving into another house, or even maybe refinancing, we cover it all. Let's dive into today's topic and make the mortgage process simple and stress-free. Welcome back to another episode of Mortgage Made Simple. Today we've got a lot to cover, from the latest mortgage market update to understanding what the difference between a pre-qualification and a pre-approval is, and how you can be ready to get pre-approved. So stick around for a real-life story about what happens when you skip some of these steps. So let's dive right in. First, we're going to dive in with just a real brief market update. So let's start with what's happening in the mortgage world. The Fed just aggressively cut rates by 0.5%, bringing the Fed rate funds down to 4 7/8%. But the cuts might not stop there. The Fed is forecasting another 0.5% cut by the end of the year or so, and possibly another full percent in 2025. Now, keep in mind, though, that these forecasts can change as new economic data comes in, so nothing is really set in stone. The Fed's aiming to ease interest rates to prevent the economy from sliding into a recession is what they're doing. But here's the key takeaway. Mortgage rates don't directly follow the Fed funds rates. However, the overall interest rate environment starts to move lower. That's typically a good sign for mortgage rates. So if you're in the market for a home loan, it's worth keeping an eye on things. All right, so let's talk about today what the difference between a pre-approval and a pre-qualification is. Two different terms. So before we get into this, just picture this for a second. Picture yourself on vacation. You're strolling down the street. There's restaurants that are lining both sides. You're hungry. You're in a good mood. You want something to eat. But let's be real. You're not just going to walk into any place, right? So you stop outside the restaurants and you check out the menu that's posted on the windows, right? And start thinking to yourself, all right, can I afford this place? That's what a pre-qualification essentially is. You're scanning the menu, if you will. You're getting a rough idea of whether this restaurant fits your taste and your wallet. So you haven't committed to anything yet. You haven't stepped inside. You're just window shopping. So let's say that you decide, yeah, I can swing this place. So you step inside, you get seated, and you place your order. You then proceed to hand your credit card over because you know you can cover it. That's more like a pre-approval. Pre-approval is like the moment that you're actually going to swipe that card. It's not just window shopping anymore. It's you're making that next move. The lender's pulled your credit, they verified your income, and the lender said, yep, you're good to go. So in mortgage terms, though, a pre-qualification is a quick glance at your financials, your income, your debts, your assets, but it's super casual. It's basically just whatever you're stating over the phone or what you plugged in on that application. So there hasn't been any deep dives, if you will, into verifying it. Oftentimes there's no credit check. And it's kind of like if you're deciding that you might want that steak, but you haven't even sat down to eat yet. And with the pre-approval, on the other hand, the lender's going to dig into the details a little bit more. They're going to check your credit, they're going to verify your income, and they're going to ask for your documentation. It's the equivalent of sitting down, ordering the steak, and handing over your card. So sellers take you more seriously when you've proven that you're ready to buy. So if you're only pre-qualified, it's just like you're standing outside at the restaurant staring at the menu. You've got an idea of what you can afford, but nothing's really guaranteed. Where pre-approval, on the other hand, it's your credit card on the table and you're ready to make an offer and close the deal. So what are some of those documents that you might need for pre-approval? Those documents are going to vary depending on each individual scenario, but in general, it's going to be proof of your income, proof of your assets, your credit history, employment verifications or VOEs, and personal identification such as your ID. Back to the proof of income, this can vary depending on what the nature of your income is, whether you're a W-2 employee, contracted, self-employed. It's all going to be a little bit different there. But, at minimum, lenders are typically going to gather your pay stubs, your W-2s, and then sometimes your tax returns, depending on if you're self-employed or particular loan programs will require your tax returns. For assets, lenders want to make sure that you've got the funds for a down payment and the closing costs and that you can cover it within the window of time that it is until you close. So this means that you're likely going to be showing your bank statements, savings, checking, retirement accounts, things of that nature. Essentially, anything that you're going to use for the transaction in terms of your assets are going to have to be sourced throughout the transaction. And your credit score, your credit history plays a huge role in getting pre-approved. You're gonna have your credit pulled. The lender's gonna look at your credit report and the liabilities pulled off that credit report or what's gonna be used to determine what your debt to income ratio is. So basically how much debt you have in comparison to your income. And a good score will show that you're responsible with your money. Employment verifications are often commonly gathered during the pre-approval process. Where this comes in handy is if you, say, get overtime or you get bonuses or commission, and the lender really needs to look at what that last 2-year history looked like in terms of qualifying you based off of that income. There's different guidelines for that, so oftentimes you need to get a direct employment verification from your employer, which is essentially just a federal form that employers fill out that just documents your last 2 history. And then your personal ID, like I mentioned, so driver's license or passport, just to prove you are who you are. A lot of times we don't meet people face to face and it's just over the phone. So we do have to gather your personal ID as part of the pre-approval process. Now that's not just an all-inclusive list. That's just a basic list. It really just depends on the scenario. But that's just to give you an idea of what types of things that you can get prepared for in order to get pre-approved for a home loan. What I want to do is just explain a brief scenario that I recently came across when it comes to pre-approvals. I'm going to tell you about a recent client that I had helped out that went under contract on a home. Let's call him Eric. Eric hit a little bit. I wouldn't say he hit a roadblock, but he did hit a little bit of a snag in his process, because when he had reached out to me, he was eager to get a pre-approval. There were some houses on the market that he had his eyes on, and really just wanted to go look at them and wanted to start making offers very eagerly. So we started gathering the necessary documents, and based on our first conversation, we were aiming for a USDA loan. So it was with the USDA loan, it's a 0 down payment option. They typically come with lower payments in comparison to some other loan programs. Good rates. It's just a great program. The thing about those loans, though, is they do have to, the home itself has to be in a qualifying area. But everything really needs to line up perfectly for a USDA loan. But things went sideways a little bit for Eric. He was excited. He started shopping. He started looking at homes with his realtor. And he found a house and he fell in love with it over the weekend. And he made an offer on it before we had the pre-approval completed for him. We had gathered most of the documents, but we didn't get the verification from his employer filled out. Sometimes it takes a little bit of time to get those back. Sometimes we can get them automated and they come right away. Sometimes they have to be sent out to the employer, and sometimes the employers don't return those right away, and we have to kind of stay on them to as nice reminders, if you will, to get those forms filled out to us correctly. And over that weekend, he had an offer that was, of course, accepted. Sounds great, right? Well, not so fast. It was great because he's still going to enjoy this house and he's still going to live in this house. But once we got all the documents and completed that income verification, he hit a little bit of a snag. It turns out that his income was too high to qualify for the USDA loan. So what was initially estimated was a conservative number for the monthly income. And he ended up making too much, putting him over the income limits for a USDA loan. So we had to switch him over to what's called an FHA loan, which allowed him to be pre-approved on that house. But the difference is that it came with a slightly higher payment. It was about $100 higher than what he had expected. And for his budget, it was a good chunk of money. So for some people, $100 is it's a good swing in a payment. And some people, they're looking in ranges where $500 may not make or break a difference. But in this case, it did make a little bit of a difference. So he's still able to buy his house. Everything worked out in the end. But there was some extra cost to it. It could have been avoided, potentially with that pre-approval at first. But again, it still all worked out in the end. So it's just something to keep in mind that, expectations may change a little bit if you don't have a full pre-approval that you've gotten established before you're shopping for a house. So the takeaways, don't jump the gun. Make sure you're fully pre-approved before you start writing offers. It'll save you from surprises and ensure that you can afford exactly what you're looking for. So thanks for tuning in to this episode of Mortgage Made Simple. And if you have any questions or need any help navigating through the home buying journey, please reach out. I'm happy to help, and I'll see you next time. Thanks for tuning in to today's guide from the Blako Mortgage Team. I hope this short listen helped you answer your questions and gave you the confidence to take the next steps in your home buying journey. If you have more questions or you want to explore your options, feel free to reach out. Stay tuned though for more quick, helpful tips to make the mortgage process easier. So until next time, we'll check you later.